As a reminder, none of what I say is financial advice. Strictly for entertainment purposes only. What's going on, guys? Thank you for having patience with me, because I know I rarely stream, and said I was going to put a stream out last night, and then last minute I decided I was going to do pre-recorded content, and I was talking to the guys that edit my videos who do a fantastic job. We were just talking about the turnaround time, and putting out a video every night and doing a short video is good if you could get it around and post it quickly. You know, otherwise certain things can expire. So I actually decided that I'll do those short form videos. I'll probably do more of those short form videos, get back on that, producing content. As cringe as that sounds, I swear, like, you could have all the hobbies in the world. I think, at least for me, there's something about talking about markets that I just can't get away from, even when I have, you know, no reason to really necessarily trade too much. Really quickly, I had something that I wanted to touch on. There are a bunch of fake Linktree links now being shared in the comment section under my posts. The real one is, obviously, it's in my header on my page, but if you look under in the comment section on my posts, you'll see people posting some version of this. And the problem is, it's not that you're getting deals for exchanges or anything like that. The problem is that it's actually fake Telegram groups and fake Discord groups and the like. So I don't want you guys to get scammed. The only real link is the one that is under my header. We're going to talk about Bitcoin. We're going to talk about ETH. We're going to talk about Solana. We'll talk about alts briefly. We'll talk about some current events, some current catalyst things that obviously have been important to the market. Talking specifically about the German government selling, which is, I think, more or less, or almost, I think, halfway done. We have CPI coming up this week. I think that that is going to be something that should offer at least some brief volatility. When I talk about Solana, I'll touch on meme coins briefly, because there is a relationship between Solana performance and Solana meme coin sector performance. But then I think there's something important that's worth talking about now that's a recent update, and that's with regard to the Solana ETF, which I think is not something that we're going to see in the short term, but I think it is inevitable. And we're talking specifically about the date. The final date for that lines up really nicely with a major Solana unlock. So this market has a way of helping people offload at more favorable prices, in particular larger people, larger entities, specifically whales. So yeah, we'll get right into it. Something worth pointing out, this post that I shared this morning. So don't lose the plot. That's kind of what I'm saying early on, because I don't want what I talk about when I get into Bitcoin and ETH to sound bearish, because it could, you know, maybe to the untrained ear, at least at the beginning. So a reminder that if you're someone who trades both ways, don't lose sight of the 6-month plus outlook with Bitcoin. BlackRock's IBIT is seeing large inflows at these levels. So my theory has been that the ETF buyers are a different type of participant. You know, they haven't really been through the gauntlet in terms of experiencing real crypto volatility. If they're someone who waited for the ETF to arrive to participate in this market, and they haven't been on our side of things in this market, on centralized exchanges, on DEXs, you know, trading day to day, or just being part of the crypto holder base, they probably don't have the same patterns of behavior sort of instilled into them or impressed upon them. And therefore, they don't really know how this market behaves as much as maybe you or I do, and how reflexive things can get. So I think they might be a little bit more diamond-handed. You know, they have a longer-term view. BDB also references this. Boomers have been buying ETF. They've been taught to hold and buy dips throughout decades. Stock indices going up only. The idea that the holder base of the Bitcoin ETF is different, I do think that that kind of feeds into this. Now, it doesn't mean they won't sell. It just might mean that it takes a little bit more for them to sell. These people will probably put in the bottoms as well, the way that they sell the bottom of the stock market too. But just, you know, a theory that I've been kind of leaning on for a little bit, because obviously it suits my bias long term. But they have been buying down here, so that's worth pointing out. So let's get into another thing that is obviously worth pointing out, the German government selling. The German government, you've actually been able to watch their wallet. You could go on Arkham, and you can see that the wallet has come down a lot. So we were down to 1.6 billion. At the peak, we were at 3.5 billion. This is not in coins, so this is just following probably the price of Bitcoin, but there's a lot of outflows. You can see the outflows almost daily. They're not really the best sellers in terms of the execution. If you look at Bitcoin's price action, whoever is selling is following some kind of basic momentum oscillator, right? And just selling when things get overbought on the 1 hour, the 30-minute chart. And we've just kind of seen that behavior all the way down. But it does seem like they're not trying to prioritize for execution cost, fees, anything like that. Anything that you would think of with someone who's trading with a very significant amount of size like this. You're seeing people, though, share images of inflows, why there's inflows to this from exchanges, I don't think that it's the German government buying. I just think that they send a certain amount to exchanges, but make no mistake, like OTC, anytime they're giving this over and they're not selling it directly at market themselves, if it's OTC and it's not some kind of auction or block trade, someone might warehouse that temporarily, but that's still going to hit the market the same way you or I sell. It's still supply hitting the market. It might not be immediate, so you'll see that there'll be outflows and there won't be the corresponding volume for the exchanges they're sending to in that day. But I think the inflows coming back to the wallets are just basically, all right, sending it to exchange, not offloading it, sending it back to the wallet, if orders weren't filled or the orders weren't completed. So that's worth keeping in mind. I think you want to pay attention to when these outflows are being shared, so when they're popping up, and then market impact overall. So high time frame chart on BTC, because you could see that last 4 months, we've been able to close within relatively the same range. So inside of that, you got both sides adding to positions. You have longs, you have shorts, you have a bunch of periods with open interest rising and then crashing, and one side being squeezed, and market trading against positioning that accumulated at both sides, anticipating breakouts. But all throughout this, you have people also building spot positions. So while open interest might get washed a bunch of times, you do have a spot market that is picking up supply. You have people offloading, obviously keeping a lid on this. You had a bunch of positive news with regard to the ETF and yet no advance in price. So there's a lot of signs that the market was absorbing this. The narratives maybe a little bit exhausted, and momentum was as well. Problem with that is this is the first time that a very significant amount of the market could be offsides. This is the first time that it's very clear that bears are in control. It's easier for the market to move down than up now because you're definitely trading against a lot more positioning that would probably like to get out of break even and sort of, quote unquote, reevaluate things. And that cost basis is not very attractive up here. It's not a very precise assumption, but it's assumption nevertheless that I think you could make with some degree of confidence that a lot of positioning is built up here. And now that positioning is for the first time probably significantly offside. And one thing I forgot to mention, this is the first time that since the advent of the ETF that most of the people that bought, if you're using some kind of anchored VWAP from the start of that trading, you can make a case for most of that holder base being underwater. Now, again, stronger hands, that theory is something that I talked about earlier, but it is something worth mentioning, right? Because when markets break down like this, it actually does become easier for them to move down. So another thing worth talking about on the high time frame is the sort of average risk level across the board. If you're trading below it, bears are in control. If you're trading above it, bulls are in control. And the other side is offsides. You'll see there's sort of this faint line on the chart. That's a 20-period moving average. If you guys have been following me since the beginning, you'll know that I've talked about this line as the most important moving average for me. This is also the level that that I have to be in or have to be cautious or out around. You guys remember when I bought 25, I talked about the multitude of reasons I needed to, but more importantly is because we were back above this, and this is on the weekly chart. This is a breakdown of this 20-period moving average. On the daily, this is useful as well. This is set up to be on the weekly, but this one is to match the chart. But you can see in the past, these have been good moving averages on the daily, on the weekly, as sort of a indication for who's in control. If anything, what this means to me is I don't have to rush, and that's why I said fools rush in. I think there's a very slim chance that we're looking at an immediate recovery. I don't think it's impossible, so I'm not assigning zero probability to it. Immediate recovery for me means basically we are trading back within the confines of this structure, right? Where most of the participation, where most of the positioning, and most of that battle had taken place. So if we're trading back within that, you send a very clear signal to the market that no, this is not a real breakdown outside of a multi-month range, that all those other signs are, while they have been significant in the past, clearly they're not prescriptive of anything. If we're trading back above, and you could use this little consolidation for reference, if we're rebid that, I am probably as long as I can get. Take this along with some other details as well in terms of sentiment, in terms of positioning, in terms of seeing that, for example, there's a lot of overhang right now. The market is very fearful. If you have that and the market is rebid higher, back within that, then that's all for nothing. And then I start really favoring the highs of this range. It's almost that simple to me. My interpretation of this break is not that necessarily this is going to lead to the next big trend down, but we have to deal with the next major pockets ahead of us. So filling out something like this, I don't think that we're going to look at much lower than 50 in the near future, but I can see a situation where we're filling this structure out. So you could see basically these high volume nodes are my areas of interest. So this is a very weak support. This is a very strong support. The most bullish scenario I still think would be maybe a multi-week, multi-month correction here. So whether or not we get that remains to be seen, but I'm not considering outside of that until there's reason to believe that. In the past, a breakout like this has signified, along with some of those other indications I mentioned, that maybe we're looking at a real trend change. I don't think we're looking at that yet. Bitcoin it's in a bit of a different situation than prior cycles. Rhymes, not repeats. Listen, there's a good reason that this was one of my really strong levels to make decisions around. Prior all-time high. Listen, you're joking around. Most people are joking around about the idea that someone might say, hey, bid above 70K, but that works, right? Now, yeah, you're implying you're waiting for that much of the market to move to confirm that, but on balance probabilities, it's very unlikely you have a triple top situation. And if you're back above this all-time high, that's why I said months ago, I said, I am defensive below prior all-time high, bullish above prior all-time high, because it's just a really good contextual level. Buying all-time high breaks, buying acceptance through prior all-time highs after multi-year corrections is something that works across multiple markets, and especially in a market that moves on momentum. Right now, in terms of just lower time frames, we are still respecting VWAPs. If you look at session VWAPs, weekly VWAPs on the way down, like where you would expect the market to step in again and offer this. So that's something worth noting. Open interest is still relatively elevated prior to these lows. Further you get away from where that open interest accumulated, the more you could say that you're putting pressure on one side than the other. So if you have positioning that accumulated within this 60K to 70K region, it's not entirely squeezed. If it's below where that open interest accumulated, that positioning is a good case to be made. That positioning is still offside and yet to squeeze possibly. So for this entire range, you still have Bitcoin slightly elevated. If we're looking at Binance from these local lows right here, not local, but going back to May. If you look at Binance open interest, still up. Funding right now, relatively neutral. You had a decent amount of open interest added in the last 24 hours. Nothing that's like jumping off the page. Again, 60K is my number. Otherwise, I could see us continually stepping down in sort of an, I would say, hopefully an orderly fashion. It's been somewhat orderly so far. So if we could, have something similar to this back here where we chop down and corrected without having any kind of cascade, that'd be great. But keep in mind, just because local OI has been purged towards the lows, we're not there yet. You still have a bunch of positioning that's from prior moves on the way up. Obviously, they're much more favorable cost spaces, but it's not like this thing can't continue to trade against positioning, especially if spot keeps selling the way it is. So if you just look at spot markets over the last couple of weeks, there's a reason for this. It's just been a ton of spot selling. So when that abates or when the market stops responding to that, then we'll know that we have a relatively decent signal. Global aggregated open interest excluding Bitcoin and Ethereum. That is at the lows going back to April. So that was the first big move down. We're back at that level. Alts have just been absolutely hammered. So this is a question I had yesterday. Did we have a situation where during Bitcoin and Ethereum's bull market corrections, alts make new lows? And one of the things I was thinking of was actually DYDX. I caught the DYDX chart. I'm looking at it. I'm thinking, wow, there were a lot of reasons to be bullish. This was something that everybody talked about. You had multi-year range break to the upside. You had a bunch of signs that this should have with a lot of other alts that obviously didn't perform as well because meme coins took a ton of attention, but just shit the bed. And I'm looking at DYDX and I'm thinking, wow, this is about to make new lows. It's really interesting because you have a lot of alts that are in similar situation. What's happening is we're still PvP. We don't have a ton of new retail, so everyone's kind of aware of how this game is played. And the interest in just bidding across the board is not there anymore. There's too many coins and not enough money to go around. All right, so ETH. A couple things about ETH. The S1's filed. Look down to low time frames. Funding, trading, relatively neutral. Good amount of OI added in the last 24 hours. Again, it's starting to slightly unwind, but this is where that S1 announcement came through. ETH looks better than Bitcoin. If we're using basically the same things that I mentioned earlier, it's below the 20, but it hasn't broken market structure in the same way that Bitcoin did. It's below longer term VWAP, so it's below quarterly VWAP. It's at the low end of the range, right? But it's still within the range. A lot of activity took place down at this level, so it's not as clear that we're below where most of the activity took place. And you could say that, it was a much larger group of people off sides. It's not the same as the Bitcoin situation because you also don't have an ETF trading yet. You're still within the range. It's not as ugly. I closed out 20% of my hedges on BTC. I have a larger Bitcoin portfolio than anything else. I was mostly delta neutral, but I picked up some ETH. And the reason is One, we're holding this structure. There's been, even during tops in the past, so back in 2018, 2017, 2019, there was like a month where ETH ran up after Bitcoin, right? After Bitcoin had actually topped. Now, these are both off the highs, but I think the idea that if Bitcoin is able to stay stable, I mean, like if it doesn't shit the bed in the next week before the ETH ETFs get green lit, I think ETH's going to pump off of that. Just keeping this simple, you did have a decent amount of open interest added from this ETF move. So if you look at the range lows of the structure, so this is the ETF move that we completely engulfed. So obviously not bullish, but it just goes to show that if Bitcoin's shitting the bed, ETH is going to shit the bed at some point as well. We're still at a surplus of positioning just from, let's say, this move alone. The market is trading a few points below that. And in terms of where we sit with relation to that, from an OI standpoint, we have a 12% rise in OI unaccounted for. Meanwhile, prices covered that move. It's not crazy, right? But it wasn't completely wiped. I look at this, and I don't want to sound overly simplistic about it, but is the ETF priced in? Well, here's the ETF move. Here we are now. Is it going to get worse before it gets better? No. If you just look at where the market has been spending time, where the market is consolidated, and where the gaps are, here's a gap, somewhat of a gap in terms of areas where the market moved relatively. This was, I would say, less assisted than this. There's a little bit more of a grind here, but without much resistance. Like we didn't establish any kind of structure, and you would call these moves inefficiencies or just pockets. This covered very quickly, but not much structure in the way. So I think that into the ETF, I think you get something that pops up. And this reminds me of the Bitcoin structure that I was talking about, the reason why I was bearish at 63. So I think into the ETF, we get this pop up. I think if Bitcoin is going to continue to correct over the coming months though, and if we're looking at, again, what you anticipate after a range break, which is more time lower than higher, I think ETF could lead to something like this. I said the other day, I think ETH can like pump 10% off an ETF. So that puts us right around there, right? I said, I think we're going to have a 10% pump and then sell off. And I said this on the spaces. I think you do get something like that. And I could see a situation where it's very unlikely that levels like this are just left. In better conditions in the beginning of the year, I could believe it. But in these conditions, I feel like these are just begging to get ran. Sort of something like Solana did in the beginning of the year. So open interest still up. Again, I think this is going to be a pump before we have a further correction. Unless Bitcoin's above 60K, then I don't think we're going to get that. I think you're just dealing with a very wide range of possibilities for ETH. Bitcoin trades above 60K. ETH gets that ETF announcement and then is basing out above 33, then yeah, I'm playing it just like this wide range and still playing level to level. But these are not playing level to level. But that's if Bitcoin does that in the near future. My belief is that ETF pump correction, something like this, and then, correct into September and then up out October. My whole thing was always come back after Labor Day. I think this kind of sets up similar to what Solana did in the beginning of the year in a much shorter period of time. Let's get to Solana though. I'm seeing everybody talk about how bullish Solana is. Solana is so bullish. Look at Solana holding up. I think that what you're doing is just building up more longs that are eventually going to get ran because, again, talking about ETH and BTC and how the market, I think, is going to behave now that the leader, sort of the representative of this entire market, which I think is Bitcoin, has broken outside of the range. And I think because of that caution, because of the likelihood that it chops a little bit more before going up again, I don't think Solana escapes that. So I do think Solana is kind of going to do a larger version of what it did in the past, which is when you had this volatility funnel, this very large funnel forming, and you had these slightly higher lows forming. It sets up for that shock, scary move down before up again. And you see this happen all the time, right? Where you see these lows accumulating. This is an easy long to walk into. So if you're going to walk into the easy long, you have to deal with that choppy environment. If you're willing to step in when it seems easy, you have to expect that right hook that's going to come at some point. Solana and Solana meme coins have kind of an inverse relationship until we have a new major leg up, new money coming in, and people are less, nervous and cautious than they are now. What you see is like if Solana goes up, it's at the expense of WIF and some of the other Solana meme coins. And that's something worth noting. Like if Solana is going to continue to go down, you'll see little pumps in Solana meme coins, but I don't think that I want to have the same exposure to them. They've underperformed Solana over the last quarter. So, for anyone who's been trying to acquire beta relative to Solana, that has not worked. So this is something that is worth noting because I'd rather own Solana than Solana meme coins at this point. The last thing I did want to point out was there's a lot of coins that are approaching levels that you probably will see bid. And that is the $1 level. We were talking about this the other day in a chat. It's actually GCR who brought this up. Just go through all of the alts, right? anything that's been somewhat relevant over the last cycle, and see what is relatively close to $1. I think WIF is going to continue lower. It's performing well at the expense of Solana, but it's a situation now where I think one is borrowed from the other. I don't know if this is going to get to $1, but I think it'll probably get close. So that's something that I would love to buy that as close to $1 as possible. Wild, that is right now at 184. I could see this trading back down towards $1. The point is that that number is an area where you're likely to see people bid. Did I say FET too? Yeah, FET is at 118. If these get to $1, I think you could see at least, I said a guaranteed 20% pump the other day in chat, and people were like, nah, you're going to get like 50% pumps. But if FET hits $1, I'll buy FET there. Wild hits $1, WIF, absolutely. Just something worth noting because of how this market tends to behave around, you know, certain numbers, whether it's $1, whether it's 10, whether it's 100. Let's see, where's the stock market at? Up, up, up and away. So as I said, you know, I was talking about like 60 to 90-day cycles. If we see a correction in the stock market, and when I say correction, I'm not talking like a doomer and talking about a reversal, right? I just mean the healthy moves on the way up that we have that keep the trend nice and healthy and not overextended. Does Bitcoin, I guess more specifically, and ETH, do they hold up or do they continue to chop lower? I don't know. Remains to be seen, but that's something worth noting because I think we are probably looking at one of those soon. Not making bets, though, on the stock market dropping because I'd rather just be long ETFs and not bother with that. I hope you guys have a fantastic evening. I'm going to make a plan for how I do the 10 to 15 minute long videos, whether I do those and post them at night or whether I post them in the morning or maybe posting at night covering the session and just keep them basic levels. I'm looking at 3 to 4 assets, maybe touching on one current event and then keeping it very short, just experimenting with different types of content. And yeah, I think that's it. I hope you guys have a good week. Remember, the CPI is on Thursday. That will probably have an effect on the markets, at least temporarily. Until then, take care.